Building a top-tier large language model in China is a capital-intensive race, requiring massive outlays for high-end hardware and engineering expertise. To recoup those investments, the industry established a standard where developers and enterprise users pay premium prices for API access and raw compute. This strategy is built on a specific condition: that advanced artificial intelligence remains a scarce and expensive resource. When that scarcity disappears, the financial ecosystem is forced to operate in a reality where its primary product is no longer a luxury good. That transition arrived abruptly with the release of DeepSeek V4. It introduced pricing so low, it effectively stripped away the profit margins of its competitors. This aggressive pricing severely undercut the established market rates for model usage. This pricing shock is rippling through the domestic market, pressuring the cloud providers who supply the underlying infrastructure to justify their existing costs. With the floor falling out of model pricing, the question for every rival is no longer just how to build AI, but how to make money from it when the price is near zero. DeepSeek V4 has forced a mandatory overhaul of business strategies as companies pivot to survive in a market where intelligence has become a low-cost commodity. For Xiaomi, the response to this price shock has been to lean into their existing scale and infrastructure. They responded by slashing the costs of their MiMo V2.5 model, aiming to capture the maximum possible share of developer traffic. A price drop of 99% from previous levels caused usage for MiMo models to surge, growing over 999% in 1 week. By Monday, it processed 1.7 trillion tokens, reaching 6th place on the OpenRouter marketplace. Xiaomi's strategy relies on volume to compensate for the lost margin, betting that processing trillions of tokens at a fraction of a cent can eventually sustain their AI operations. While Xiaomi pursues volume, the AI unicorn MiniMax is testing a different path with the launch of its flagship M3 model. Instead of following the race to the absolute bottom in per-token pricing, MiniMax is attempting to introduce more structured monetization. They are moving toward a hybrid system that pairs standard token billing with recurring subscription plans. This new tier system ranges from $7.24 to $69.28 per month, as seen in this pricing matrix. By implementing these subscriptions, MiniMax is attempting to lock in a baseline of predictable income that isn't entirely dependent on the fluctuating price of tokens. This move seeks to create a more stable financial environment, shielding the company from the pricing volatility currently shaking the rest of the sector. These two strategies, Xiaomi's pursuit of massive volume and MiniMax's push for predictable subscriptions, show how the sector is splitting in two. Across the industry, the era of relying on simple, high-margin AI access as a primary business model is coming to an end. Even with the surge in user growth, the rapid transition between these monetization models creates instability as providers and developers struggle to find a sustainable equilibrium. The current competition is no longer just a contest of technical capability. It has become a test of which business model can remain standing when the cost of intelligence reaches the bottom.